Welcome back. Earnings season is rolling on, and we got an important update from Hilton, the company reporting adjusted earnings per share at 56 cents a share, better than the street at 34 cents, but revenue coming in a bit lighter than expected as the company and the entire hospitality sector really await the return of business travel. And for more on that, happy to bring in Kevin Jacobs, Hilton CFO and President, Global Development, alongside Yahoo Finance's Brian Sozzi. And Kevin, appreciate you coming on here to chat with us today. Shares up more than 4%, so investors liking what they're hearing on the recovery. But when you look into the numbers here, how are you seeing it shape up as people get back to traveling?
Yeah, good morning, good afternoon. Thanks for having me. I think the story of our second quarter was really one of sequential improvement over the course of the quarter and sort of the beginning of a sustained recovery in our business. So if you think about, our RevPAR, which is our measure of same-store sales, for the first quarter was down about 50%, or actually a little bit over 50% relative to 2019, which would have been the normalized peak. And really over the course of the second quarter, that improved such that by June, that was down about 29% relative to 2019. And in fact, month to date so far in July, that measure is less than 20% below 2019. So really sequential improvement, both in every region of the world, although some regions, of course, are, further ahead in recovery than others. We improved in every region of the world, and we improved, as importantly, in every segment of our customer demand. So what's been really a leisure-driven recovery, and our leisure demand and rates have been quite strong, you're now starting to see business travel recover, although certainly not to the levels that it was in 2019. You're seeing a really sustained recovery in business travel as well, and a little bit of signs of life in group as well.
So, Kevin, it sounds as though the momentum continued into July, business travel picking up, also leisure. Is leisure back in terms of RevPAR and occupancy back to pre-COVID levels?
Yeah, it is, Brian. In fact, in July so far, we're running, leisure in terms of demand or occupied room nights about, at or slightly higher than 2019 with rates above 2019. So I'd say leisure, really is back. In fact, there's more capacity. It's probably even better than it would have been normally because there's more capacity available for leisure travelers, but it's been quite strong.
What's the outlook on the business side? There seems to be a lot of questions about to what extent that business travel that we saw pre-pandemic is going to return now that the work environment has shifted so much. What's your outlook on that front, and how quickly do you see it bouncing back?
Yeah, Akiko, that's the big question, right? That's what we talk to investors about all the time, and frankly, what we ask ourselves and our teams. And, look, in terms of how the world's going to be, in terms of how quickly, people are going to return to offices, or how hybrid will the world be, we don't know, of course. We can't really predict the future, but I'd say in general, we're not big believers in new normals. We think that what we're seeing right now in real time, again, I mentioned some stats, so I won't repeat them, but over the last 7 days, we've run in the United States 74% occupancy system-wide. And that includes, in big urban areas, we still have hotels that are shut down or largely shut down because there's not a lot of activity in those areas. So 74% means that, it's the summertime and a lot of that's been leisure, but that's not no business travel. So we, again, believe that business travel is running about 70% of where it was in 2019. And so obviously that's still down 30%, so we're not all the way back. But what we're hearing from our customers and when you talk to our corporate clients is that everybody does intend to travel again. And, the way they travel may be slightly different. The amount of time they spend in the office, versus on the road may be slightly different. But we believe that business travel will fully recover. And when does that happen? It's happening now. It probably will pause again a little bit in August, as, August is generally, in the best of times, right, not a really strong business travel month. So it'll probably slow down a little bit in August. And then we think after Labor Day, it will continue to recover. And when it's back, fully recovered, we don't know exactly, but we do believe that it will fully recover and then some, right? Because it's not business travel or the amount of business activity is not really exactly same store, right? You have business formation over time, you have economic growth. So we believe that the outlook for business travel is quite positive, and we'll wake up one day, who knows, quarters, a couple of years down the road, and you'll see a level of business travel that we think looks the same or better than it was before the pandemic.
Kevin, do you think one thing holding back the recovery in your business and even the broader industry is the scarcity of hotel workers?
Well, it's a good point, Brian, and it's a really big issue. So, we don't think it's really holding back recovery. We do see some examples. It is hard to get workers right now, and that's not really unique to the hotel business. It's really, a really tight labor market overall, and specifically in service businesses, it's really hard to hire people right now. There are reasons for that are somewhat structural. Some of those are, not necessarily short-term issues, but we believe a lot of them are, whether that's federal unemployment insurance or the fact that people are still concerned about the virus or the fact that, schools haven't yet returned in the fall, so people have childcare issues. There's a bunch of things that are sort of tightening the labor market dramatically, and it is hard to get workers in our business, and it's something that we're working really hard to work through with our hotel owners. There are some limited cases where hotels are purposefully, holding occupancy back a little bit. And by the way, they're using that as that means they can drive rate even more, right? Because they're selling fewer rooms so they can charge more for the rooms. And ultimately that helps the owners be more profitable. But we don't think that those dynamics are holding the recovery back. Again, all the stats that we gave on our call and the performance in the quarter and the stats that I gave earlier in the interview, sort of indicate that the recovery is happening. And so it's obviously not holding it back completely.
I want to zoom into one market, important market for Hilton. That's Las Vegas. You have 30 properties in Vegas, 11,000 rooms. What are you seeing there in terms of demand?
Yeah, demand's been strong in Las Vegas. We celebrated the opening last month of Resorts World Las Vegas, which has 3 of our great brands, LXR, Conrad, and Hilton, 3,500 rooms on the Strip. We also recently converted the 1,500-room Curio Collection Virgin Las Vegas. And so those hotels, we were out there for the grand opening. The place was full. There were a lot of people there. Occupancies are rising. And so, again, Vegas is not that much different than the rest of the world. Vegas is generally a pretty strong leisure market, but also relies on business travel and, frankly, conventions. And so they're on the same trajectory of recovery as the rest of the businesses, which has been leisure-led, and then business travel and conventions are coming, but will come later. But we're really excited about particularly what we have going on in Las Vegas, but also the future of Las Vegas as a market.
Yeah, leisure travel leading some of that business travel across the board. Vegas no exception, but interesting to hear how that rebound's been going. Kevin Jacobs, Hilton CFO and President, Global Development, alongside Yahoo Finance's Brian Sozzi. Appreciate you both.